Hey everyone, and welcome back to Investing Talk Podcast. So, today we're going to be looking at Denison Mines, ticker symbol DNN. And they're a company that's all about uranium. Now, if you're interested in, investments that are tied to some pretty big global trends and maybe have the potential for some serious growth, DNN might be worth putting on your watch list. But like any investment,
Yeah.
There's a lot to consider. So let's dive in.
Yeah, what's really interesting about Denison is they seem to be in a really unique position. They've got this mix of short-term uncertainty, but there's also this long-term potential there. And they're ranked #1 globally for mining development projects in 2024, so that's pretty impressive.
Yeah, that is impressive. And their 2023 financials, definitely seem to show that they're on the right track. They had a $134 million gain on their physical uranium holdings. And that was largely due to uranium prices doubling from $48 a pound of U3O8 to $91 a pound by the end of the year. But I'm curious, what exactly is U3O8?
That's a great question. So U3O8, it's also known as triuranium octoxide, but basically it's the most common form of uranium oxide that you find in nature. And it's that raw material that's mined and then processed to extract the uranium that's used in nuclear reactors. So think of it kind of like crude oil before it's refined into gasoline.
Okay, yeah, that makes sense. So Denison made a tidy profit last year, when those prices shot up. Yeah. But then things took a bit of a downturn. In the second quarter 2024.
Right, yeah. In Q2 2024, their revenue was only $1.85 million, which, when you factor in their expenses, actually resulted in a net loss of almost $16 million. So this really just goes to show how volatile the uranium market is and how volatile, companies like Denison can be. It's a bit of a roller coaster ride.
Okay, so let's step back for a second and look at the bigger picture here. What's happening in the overall uranium market that could be causing these fluctuations and affecting Denison's performance?
Yeah, so the market's in a really fascinating phase right now. And the big issue is scarcity. So basically, the world might not be mining enough uranium to meet that future demand. And that pushes prices up to encourage, more mining. So think of it like this. The less of something there is, the more valuable it becomes.
Right. Okay, so with this increasing demand then, wouldn't that put Denison in a good spot, for future growth, especially with their Wheeler River project moving closer to approval?
I read that they recently filed the final environmental impact statement, which seems like a pretty big step forward. Yeah, it definitely puts them in a potentially advantageous position. However, we also have to acknowledge that dip in their stock price back in November of 2024. And several things contributed to that, including worries about marginalized uranium prices, which basically means prices that are too low to incentivize new production and cover the cost of mining. And there were also concerns about potential global instability, which always adds uncertainty to any market, especially commodities.
Right. Yeah. It seems like there's this bit of a tug of war, between that long-term potential and then those short-term anxieties. And investors are kind of trying to figure out, which side is going to win. So let's fast forward to today then, January 17th, 2025. How's Denison's stock price looking?
Okay. So as of today, DNN is trading at $1.88. which is a slight increase of just over 1%. What's interesting, though, is it's been kind of stuck in this tight trading range between $1.84 and $1.92. And this is what's known as consolidation. And it often indicates that investors are on the fence, kind of waiting for something to happen, like a major news announcement or a significant market shift, before they make their next move.
So they're holding their breath, watching closely for any clues.
Yeah.
Okay, so that's where the technical indicators come in, right? Can you walk us through those?
Yes.
Explain, what they're telling us about Denison's short-term outlook. I know charts and graphs are your thing.
Absolutely. So let's start with the moving averages. So Denison is currently trading below both its 50-day and 200-day moving averages, which is generally seen as a bearish signal. This basically means that the stock price has been trending downwards over, these time periods. And to make things even more interesting, the short-term EMAs, those are the 5, 10, and 20-day ones, are also giving us sell signals. Now, I want to emphasize that these are just indicators, not crystal balls. But they do suggest that their stock price might continue to drop in the short term.
So those indicators are painting a somewhat pessimistic picture, but didn't you say earlier that the RSI is hinting that the stock might be oversold? What does that mean exactly? No.
You're right. So the RSI, or Relative Strength Index, is currently at 42.37. And you can think of this like a thermometer. For the stock's momentum, anything below 30 is considered oversold, and anything above 70 is considered overbought. So while Denison isn't quite in oversold territory yet, it's getting close, which suggests that this recent dip might have been a bit too much too fast. And some investors might see this as a potential buying opportunity, betting on a rebound.
Okay, so the RSI is giving us a little glimmer of hope amidst the bearish signals.
Oh, yeah.
But then we also have the MACD, right? What's that telling us?
Right, the MACD, or moving average convergence divergence. It's another momentum indicator, but it looks at the relationship between two different moving averages. And in Denison's case, the MACD is slightly negative, which just kind of adds more weight to that bearish sentiment.
Okay, so we've got mixed signals.
Yep.
From the technical indicators.
Yep.
Which, makes it tricky to predict what might happen next. But one thing that really stood out to me was the trading volume on January 17th. It was significantly higher than average, with almost 34 million shares changing hands. What does that tell us about investor interest?
That's a great observation. So increased trading volume. Whether the price is going up or down usually means that investors are paying close attention. It signifies increased activity and potential bets being placed on the stock's future direction. It definitely adds to the intrigue, doesn't it?
Absolutely. It
Yeah.
makes you wonder, what those investors might know that we don't,
Mhm.
or at least what they think they know. But numbers only tell part of the story. So let's shift gears a little bit and talk about the actual news surrounding Denison. What are some recent events that might be influencing the stock's performance?
Well, as we mentioned earlier, there's been positive progress on their flagship Wheeler River project. Filing that final environmental impact statement is a major milestone.
Yeah.
Because it brings them one step closer to actually getting approval for production.
That's great news. And I was also reading about their partnership with COSA Resources. Can you tell us a little bit more about that?
Yeah, so their collaboration with COSA Resources is another indicator of Denison's strategic thinking and ambition. So they've formed joint ventures on multiple uranium exploration projects in the eastern Athabasca Basin, which is a prime area for uranium deposits. And this partnership gives Denison a 19.95% ownership stake in COSA, effectively expanding their exploration portfolio and giving them access to a larger pool of potential resources.
So we've got positive advancements in their key project, strategic partnerships, and heightened investor interest. These all seem like good signs. Plus, let's not forget that stock surge of almost 12% back on January 2nd. Didn't analysts attribute that to, positive ground reports?
Yeah.
And general optimism surrounding the uranium market?
Exactly, yeah. That jump in price really highlights how closely Denison's fortunes are tied to the overall performance of the uranium market.
So for the average investor out there, who might be considering adding DNN to their portfolio? What does all this mean? Should they be jumping in head first, cautiously waiting on the sidelines, or running for the hills?
Well, Denison is definitely a company to keep an eye on, but it's not for the risk-averse. As we've discussed, the uranium market can be unpredictable, and Denison's stock price reflects that. There's potential for long-term growth, especially if the demand for uranium continues to rise as predicted, and their key projects get up and running.
But there are also risks involved, right?
Absolutely. Those short-term headwinds we talked about, like geopolitical uncertainty, and the potential for uranium prices to drop could impact Denison's performance in the near future. And let's not forget that while their recent capital expenditures, those investments they're making could set them up for success down the line, they also represent a substantial financial commitment. That needs to pay off.
So proceed with caution. It seems like there are some exciting possibilities on the horizon for Denison, especially if the uranium market develops, as some analysts are predicting. So for our listeners who are following along, what are some key takeaways that they should be focusing on?
I think the main takeaway is that Denison is a company with a lot of moving parts. They have the potential to become a major player in the uranium market. But they also face some significant challenges, so investors need to carefully consider both that long-term potential and the short-term risks, and make informed decisions based on their own risk tolerance and investment goals.
Well said. We're going to take a quick break, but when we come back, we'll continue our look at Denison Mines, exploring those investment considerations in a little more detail, so stay tuned.
Stay tuned.
Welcome back to Investing Talk Podcast. Denison's journey kind of reminds me of those classic treasure hunt movies. You got these explorers venturing into uncharted territory, facing obstacles and dangers, all in pursuit of something valuable.
Oh, I like that analogy.
So Denison's like those explorers,
Yeah.
and their treasure is uranium, this vital resource that powers our world. and they're staking their claim in these promising yet often unpredictable regions, hoping to, strike it rich.
Yeah, it's a great way to visualize it. And just like in those movies, success isn't guaranteed. There are risks and setbacks and moments of uncertainty, but there's also the potential for significant rewards if they play their cards right.
So let's say some of our listeners are intrigued by Denison and the potential of the uranium market. What are some key factors they should consider before making any investment decision?
Well, first off, it's important to understand that Denison is what we call a junior miner. This means they're not yet producing uranium on a large scale, which makes their revenue streams relatively small and vulnerable to shifts in the market price of uranium.
So they're more susceptible to those short-term price swings we talked about earlier, right?
Yes, exactly. Investors need to be comfortable with a certain level of risk, understanding that Denison's journey to profitability might take time, if it happens at all. Patience is key here.
Right. Patience is a virtue, especially in investing. You mentioned earlier that Denison has been making significant capital investments. How do those investments factor into the equation?
Those investments are a crucial part of their story. Denison is putting resources into developing their flagship Wheeler River project and expanding their exploration portfolio through partnerships like the one they have with COSA Resources. These investments are essentially bets on the future, bets that the demand for uranium will keep growing and that Denison will be in a prime position to meet that demand.
So high risk, high reward. If those bets pay off, Denison could be looking at a very bright future. But if things don't go as planned, those investments could become a burden. It's a delicate balance, isn't it?
Precisely. It's all about assessing that potential upside against the inherent risks. And that brings us to another crucial factor, Denison's management team.
Yes, the human element. Often overlooked, but incredibly important. What should investors be looking for when evaluating the management team?
It's all about experience, vision, and execution. Do they have a proven track record in the mining industry? Do they have a deep understanding of the uranium market? And most importantly, do they have a clear and realistic strategy for navigating the challenges and opportunities ahead?
So investors should dig a little deeper, go beyond just the numbers and financials, and get a sense of the management team's capabilities and their vision for the company's future. It's like checking the pilot's credentials before boarding a plane, right?
Exactly. You want to feel confident that they have the skills and experience to steer the ship, especially when you're dealing with a company like Denison that's still in its developmental stage.
Evaluating a junior mining company like Denison is like putting together a puzzle, isn't it?
Yeah.
You've got all these different pieces, market conditions, the company's financials, the management team, the projects they're developing, the news and events shaping their trajectory. And you need to carefully consider how all those pieces fit together to see if the picture makes sense.
You nailed it. There's no magic formula, no guaranteed answer. It takes careful research, a willingness to dig into the details, and a healthy dose of critical thinking.
And let's not forget about staying informed. The mining industry, especially the uranium market, is constantly evolving. New discoveries, technological advancements, geopolitical events, all these factors can impact a company like Denison.
Absolutely. Investing in a company like Denison is not a passive activity. It requires active engagement, continuous learning, and a long-term perspective.
So let's say a listener has done their homework, weighed the risks and rewards, and decided to invest in Denison. What are some key things they should monitor to track the company's progress and make informed decisions about their investment?
Well, they should definitely keep a close eye on the progress of Denison's key projects, especially Wheeler River. Look for updates on permitting financing, construction timelines, and any potential challenges or delays. These milestones are like checkpoints on a map, indicating whether Denison is on course to reach its destination.
So it's like following along with those treasure hunters as they navigate the jungle, watching for signs of progress or setbacks. What else should investors be watching?
They should also be monitoring Denison's financial performance closely, paying attention to key metrics like revenue expenses, cash flow, and debt levels. Are they generating enough revenue to cover their operating costs and debt obligations? Are they managing their capital expenditures efficiently? These are all important questions to ask.
It's like checking the treasure hunter's supplies, making sure they have enough resources to continue their expedition. But it's not all about the numbers, is it? There are also those external factors, things outside of Denison's control, that can still impact their performance.
You're absolutely right. Investors also need to keep an eye on the broader uranium market. Things like uranium prices, supply and demand dynamics, any major geopolitical or regulatory changes. These can all affect Denison's success. It's like being aware of the weather conditions, the potential storms that might be brewing on the horizon.
So it's all about staying vigilant, being adaptable,
Mm.
and adjusting your course as needed. Speaking of those potential storms, let's talk about the risks associated with investing in Denison. We touched on them earlier, but it's worth exploring them in a little more detail.
Absolutely. As with any investment, there are inherent risks associated with Denison Mines. And understanding those risks is crucial for making informed investment decisions.
Okay, let's break it down. What are some of the most prominent risks that potential investors should be aware of?
One of the most significant risks is the volatility of the uranium market. As we discussed earlier, uranium prices are influenced by a complex web of factors, including global supply and demand, geopolitical events, government policies, and technological advancements.
So many factors can make those prices go up and down. Like a roller coaster, investors need to be prepared for those fluctuations and not panic when the price dips. What other risks should be on their radar?
Another key risk is related to the successful development and operation of Denison's projects, especially Wheeler River. Developing a uranium mine is a complex and capital-intensive undertaking involving numerous technical, environmental, regulatory, and financial hurdles. There's always the risk of delays, cost overruns, or even project failure, which would significantly impact Denison's financial performance and future prospects.
It's like building a house. You might run into, unexpected problems, delays, unforeseen weather events that set you back.
Exactly. And those unexpected problems can be even more significant and costly. When you're talking about a mining project,
Okay, so we've got market volatility and project development risks. What else should investors be considering?
well, there's also the risk of competition. Denison operates in a global market, competing with other uranium mining and exploration companies. For resources, customers, and investment capital, some of these competitors might be larger, better established, and have more financial resources than Denison, which could put pressure on their market share and profitability.
It's like a race to find and extract this valuable resource. And Denison has to not only be fast and efficient, but also outmaneuver its rivals to secure its place in the market. What other competitive factors might come into play?
Well, innovation is crucial in this industry. The uranium industry is constantly evolving, with new technologies and extraction methods being developed. Denison needs to stay ahead of the curve, investing in research and development, and adopting new technologies to remain competitive and maintain its operational efficiency.
So they can't just sit back and rely on existing methods. They need to be constantly innovating, pushing the boundaries, exploring new frontiers, just like those intrepid explorers we talked about earlier. But innovation requires investment, which brings us back to the financial side of things.
Exactly. Denison needs to carefully manage its finances, balancing its investments in exploration, development, and operations with the need to generate revenue and maintain a healthy financial position.
It's a delicate balancing act. Speaking of balance, one risk that often gets overlooked is the environmental impact of uranium mining.
That's a critical point. Uranium mining, like any extractive industry, has the potential to impact the environment. Denison needs to operate responsibly, minimizing its environmental footprint, adhering to strict regulations, and addressing any concerns raised by local communities or environmental groups.
So it's not just about profits and growth. It's about operating in a way that's sustainable, both from an environmental and a social perspective.
Precisely. And investors are increasingly paying attention to these factors, scrutinizing a company's environmental, social, and governance, or ESG, performance. A strong ESG track record can enhance a company's reputation, attract investors, and reduce the risk of negative publicity or regulatory challenges.
Okay, so we've got a pretty comprehensive list of risks here.
Yeah.
Market volatility, project development challenges, competition, innovation pressures, financial management, environmental impact, and ESG considerations. It's a lot to take in, but it's important for potential investors to be aware of these risks before making any decisions, right?
Absolutely. Informed investing is all about weighing the potential rewards against the inherent risks. And understanding those risks is essential for making sound judgments and managing expectations.
It's like that old saying, forewarned is forearmed. The more you know about the potential pitfalls, the better prepared you are to navigate them. But let's not end on a completely negative note.
I agree. While we've highlighted the risks, it's important to remember that Denison also have a number of factors working in its favor.
All right, they've got some tailwinds, pushing them forward too.
Exactly. And we'll delve into those positive factors, those potential catalysts for growth, when we return after a short break.
Welcome back to Investing Talk Podcast. Before the break, we were discussing the risks associated with investing in a company like Denison Mines. But you know every good investment story needs a little optimism, right? So let's shift gears a little bit and focus on the positive aspects. What are some of Denison's strengths and potential growth catalysts that might make them an attractive investment, despite those risks?
Well, one of Denison's most significant strengths is their really solid position in the uranium market, and particularly their ownership of the Wheeler River project, which is in the Athabasca Basin in Saskatchewan, Canada. It's considered one of the world's largest and highest grade undeveloped uranium deposits.
That's huge. But what makes the location so important?
Well, the Athabasca Basin is known for its high-quality uranium deposits, and Denison's Wheeler River project is strategically located right in the heart of it. Not only that, but Canada has a stable political environment and really well-established mining regulations, which provides investors with a level of certainty and minimizes political risk.
So it's like having a uranium mine in a safe and secure neighborhood. That has to be a major advantage for investors.
Absolutely. It significantly reduces the risk of unexpected disruptions or challenges related to political instability or regulatory uncertainty, which can be major concerns for mining companies operating in other parts of the world.
Location instability definitely seem to be working in Denison's favor. What else is contributing to their potential for growth?
Well, another key factor, the long-term outlook for the uranium market. As the world shifts towards cleaner energy sources, nuclear power is getting a second look as a reliable and carbon-free alternative to fossil fuels.
Yeah, that makes sense. With growing concerns about climate change and the need for clean energy, nuclear power is becoming more appealing. So how does this connect back to Denison?
Well, uranium is the fuel for nuclear power plants. So as the demand for nuclear energy increases, so does the demand for uranium. And this could drive up uranium prices, potentially benefiting companies like Denison, who are ready to supply this essential resource.
So Denison is in a prime position to ride this potential wave.
Sure.
Of increased demand for uranium.
Exactly. They're strategically positioned to capitalize on this growing global demand for uranium. Things go as predicted.
But they're not just sitting back and waiting, are they? We talked earlier about their strategic partnerships and investments in new exploration projects.
You're right. Denison is actively pursuing growth opportunities, expanding their exploration portfolio, and seeking strategic partnerships to make the most of their expertise and resources. Their joint ventures with COSA Resources, for example, give them access to even more promising uranium exploration projects in the Athabasca Basin, further strengthening their market position.
So they're not just holding on to what they have. They're actively looking for ways to expand their reach and potential.
Yes, they are diversifying their portfolio, spreading their bets, which helps mitigate risk and could enhance their long-term growth prospects.
Okay, so we've covered a lot here. A favorable location, a stable political environment, a potentially booming market, and a company that's actively pursuing growth opportunities. These are all compelling reasons to consider investing in Denison.
They certainly paint a positive picture, but it's important to remember that investing always involves risk. Investors need to carefully weigh those risks against the potential rewards before making any decisions.
So to summarize, what's the most important piece of advice you would give to our listeners when it comes to considering Denison as an investment?
I think the most important thing is to do your research. Understand the company, understand its projects, its management team, the uranium market, and the risks involved. Investing should never be a gamble. It's about making informed decisions based on a solid understanding of both the opportunities and the potential challenges.
Well said. Knowledge is power, especially in the world of investing. So there you have it, folks. Our look at Denison Mines, a company that, like the uranium it seeks, holds immense potential, but also carries inherent risks. Whether it's the right investment for you depends on your individual circumstances, your risk tolerance, and investment goals. But hopefully this episode has provided you with some valuable information and insights to help guide your decision-making process. And as always, we encourage you to continue exploring, researching, and engaging with the exciting world of investing.
Yeah, remember, the more you learn, the better equipped you are to navigate the market's ups and downs and make informed decisions that align with your financial goals.
Thanks for listening to Investing Talk Podcast. If you enjoyed this episode, please subscribe to our channel, share it with your friends, and leave us a comment with your thoughts and questions. We appreciate your support. Until next time. Happy investing.